Welcome to the Deep Dive. We're the place you come to get right into the source material, pull out what really matters, and, well, get you properly informed fast.
Yeah.
Today, June 23rd, 2025, we're looking closely at the global and Indian stock markets. You asked us to unpack what happened, spot the trends, and figure out the investor mood, especially when it's not shouting from the rooftops. So, digging into today's market overview, what's the first thing that jumps out? The immediate story.
Hmm. Well, what's really quite illuminating today, maybe even a bit counterintuitive, is this quiet shift. Yes, there's caution. We saw that broadly. But our sources point to significant capital moving sort of under the radar. It's not just pulling back. It looks like a strategic move away from some of the big tech names and into niche infrastructure globally. So let general caution, more specific reevaluation. That really sets the tone.
Okay, infrastructure. Interesting. Let's stick with the global picture for a second then. Our sources mentioned the U.S. market stayed, well, subtly weak. The S&P 500, the Nasdaq, both down slightly. But you said it wasn't broad selling. What's behind that kind of nuanced feeling globally?
Right. If we connect the dots, a big piece of this puzzle for the U.S. is definitely the upcoming Federal Reserve interest rate decision. Investors aren't just waiting. Our sources looking at options trading data show a real spike in bets on volatility around the Fed's next meeting. That suggests a pretty strong disagreement on whether we'll see one last hike or if they'll hold rates for longer. It's about the signal, what the Fed plans next. And meanwhile, Asia was, well, a mixed bag. Hang Seng felt some pressure, Nikkei pretty flat. It really highlights that this uncertainty isn't everywhere. It's quite targeted.
Yeah, targeted uncertainty. That's a good way to put it. And that global undercurrent, that targeted caution, it makes you wonder about the ripple effect, right? So how did that translate to the Indian markets? They often have their own dynamics. We saw the Sensex closing down, about 150 points.
Yeah.
And the Nifty 50 also dipped, maybe 50 points. A noticeable drop. So which specific sectors felt the heat most? And crucially, were there any surprises? Any areas holding up?
Yeah, that's an important question, the sector performance in India. We definitely saw significant pressure on banking and IT stocks through the day. Those sectors often act as bellwethers for the wider economy, corporate spending. And our sources highlighted something specific within IT. It was mainly the service-based firms feeling the pinch, not so much the product companies.
Okay.
It suggests a very specific worry linked to global service demand.
Okay.
But yeah, it wasn't all negative. Metals and auto sectors actually provided some much-needed support. They stopped the market falling further.
Interesting.
It shows a clear split, doesn't it? Almost like two different stories playing out within the Indian market itself. Our analysis suggests that government infrastructure spending commitments, plus some strong demand projections before the festive season, probably propped up metals and auto, kind of a counter-narrative to the overall dip.
That is a fascinating split. Okay, so pulling all this together, what does this really mean for you, listening in, armed with this nuanced snapshot of today?
Well, if we connect it back to the bigger picture, I think the main takeaway is this mood of caution, but it's very selective, not uniform. And alongside that, the expectation that volatility will likely stick around this week. So this raises a key question, right? For anyone tracking these trends, the focus really needs to be on watching global cues, sure, but also digging into those sector specifics. And upcoming economic data releases, especially anything hinting at this reallocation of capital rather than just a broad market retreat.
Absolutely. And as you think about this, consider how these daily moves, even if they seem small sometimes, are part of a much bigger, more complex economic story. What could this selective caution, this capital shift imply beyond just the markets? Maybe for, broader investments in real assets or even changes in how consumers are spending. Stay smart, stay informed, and we'll see you in the next deep dive.